Straight Talk Live.
Off. Should we get started?
Let's go. Let's crack on. It's a beautiful day in London.
It's also a beautiful day here in San Diego.
They buy things to impress people that they don't even like.
You do have to change the culture. The culture in the organization is the most important.
It's as if reality is splintering into multiple shards.
Welcome to Straight Talk Live. I'm one of your co-hosts, Rick Snyder. I'm the author of Decisive Intuition and the CEO of Invisible Edge, and one of the co-founders of this amazing not-for-profit show where we dive into the heart of human, digital, and social transformation. And I'm very excited about today's show. We have an amazing return guest, Dale Kutnick, that we'll introduce in a second. But really diving into this whole world of crypto that everyone's talking about these days. And even deeper than that, along with that, is around blockchain technology and tokens. And what does all this mean for your business, your personal investment strategies, and beyond? But before we go any further, I'm going to introduce our amazing co-host, Af Malhotra. Af, take it away.
Thank you, Rick. Welcome, everyone. Delighted to be on the show again. And yet again, we have a fantastic guest, returning guest, in fact. So, of course, I'm the co-creator of this show as well, and the co-founder of Growth Enabler. Actually, since we started this endeavor, this mission, I've spent a lot of my time, it's been life-changing for me, in the world of philanthropy. So not only have I dedicated my mind and energy to doing good for society at a much higher level, I'm about to set up my own foundation to try and eradicate hunger in the United Kingdom, believe it or not. So not Africa or India or anything like that. We have our own problems in the UK, and it's such an amazing experience I've had over the last year or so. One of the most important takeaways for today really is that as you think about prosperity and growth, you also have to think about some of the dark side of new technologies and this whole area of crypto, blockchain, NFTs, tokens, and so on. I've had people pick up the phone and call me and ask for advice, and I've said I can't give any because, frankly, I don't really know what the bright or the dark side is. There's a lot of upside here. Loads of people have made money. I know people who have become millionaires personally on Bitcoin, and I won't talk about who they are and how old they are, but they're certainly younger than I am. And there are people who've lost a lot of money, and the average person has lost a lot of money with the fluctuation on things like Bitcoin. So today's session is very important. I'm hoping Dale will enlighten us, and there'll be a lot of questions. I know a few people who are past guests have been on the show before, have come on today, who are also buried in blockchain, immersed in crypto, understand NFTs pretty well. So ask us questions. Let's have a proper discussion over this. So I'm going to kick over the football to you, not because England lost, just because the World Cup's coming up next year. And why don't we crack on with the proceedings, Rick?
Okay. So once again, our Dale Kutnick is going to be joining us right now. And he is an SVP at Gartner and former board member, also the founder of the Laura and Dale Kutnick Foundation. Has been incredibly successful career, mentor to many CIOs and incredible entrepreneurs as well. And so, Dale, welcome back to Straight Talk Live.
Thanks a lot. My pleasure. This will be fun.
So, Dale, let's go right into it. Obviously, you've been in the space for a long time around the digitization of money and what's been happening in the trends of that in the last couple decades, actually, and all the movement that's been leading towards this direction. Let's just start with just some basic definitions, if you will. When you hear what is blockchain? What are NFTs? Give us a little just simple background on that.
Yeah, so let's just start at the top. Blockchain is basically nothing more than a distributed ledger with a specific protocol that is attached to it that enables people to either move information. Usually it could be information about things, virtual things, could be even physical things, but NFTs, non-fungible tokens, which have taken off in the past year or so, and is now a multi-billion dollar market. There have been NFTs sold for tens of millions of dollars. And again, these are abstractions typically of something like an abstraction, a digital version of a painting or a digital version of a photograph or of a video. That's what a non-fungible token is. We'll talk more about that in a minute. But the real, when you get right down to it, yes, those work on a blockchain. So a blockchain is nothing more than a way to move and store. There's definitions about how you store it, obviously, as well. It's stored on various systems. Miners, in the case of Bitcoin, keep track of what's going on. Allegedly, it is decentralized. Governance is allegedly, in the group, but the vast majority of blockchains actually are not decentralized. They're not anonymous, which clearly people think they are, but governments have gotten wise to it and they just follow along and they keep track of it anyway. So for most people, don't count on anonymity. So if you're a criminal, just joking, but the vast majority of Bitcoin transactions are still about speculators, and we'll call it the black market, but less than 5% of actual transactions, we're talking billions, in any given day or two, that take place in Bitcoin or Ethers or so on, are nothing more than people buying and selling. It's speculation. Obviously, ransomware is often paid in Bitcoin. I'd say more often than often. It's pretty regular, and yet as an example, the FBI was able to find a wallet for the last big we'll call it ransomware attack on infrastructure down at an oil company in the South, and they were able to recover most of the money. So keep in mind, for those of you who think that this is anonymous and it's all black market, only if you're pretty skilled at hiding who you are. Those and as an example, Coinbase, which is one of the larger exchanges along with Binance. Coinbase is a public company where it changes pretty dramatically every day, but roughly, $40 billion as an exchange. It's like a bank of sorts, and it will mix and match currencies. But as an example, a third of their employees, I might be off by a little, it may only be 25%, but it's enormous, are in compliance. They want to make sure that the government knows is okay. It's a public company. So they, what they really do is they enable you, kind of grease the wheels of, the cryptocurrency by enabling people to buy and sell Bitcoins or Ethers or exchange. I think they have about 40 different cryptocurrencies that they work in. So back to the question about the definition. It is, despite all the noise about it, it really is it's a protocol more than anything else. And its approach to doing, I'll call it decentralized management of information that people want to share.
So thank you for that, Dale. So let's talk a little bit, let's stay on blockchain for a moment, because I think it's the foundation block of the next two things that we're going to talk about, crypto and then NFTs. And they're more saucy, hot potatoes, as we might want to call them. So with blockchain, I'm going to ask you really simple questions, not because our audience is not aware, but I think sometimes it's important to ask really simple questions and then it reveals a lot more. So firstly, why do we need something like a blockchain? Wasn't it just fine? I mean, what's the problem here?
Yeah, so that's a great question. So we don't. That's the answer. The simple answer is we don't. It is a for those who are interested in anarchy, originally hiding their transactions, things like that. That's pretty much the only reason why there'd be a blockchain. But a lot of the things that are done on blockchains could be done, in any kind of distributed ledger. Blockchain, again, just defines a protocol. I would say, if you were to go back to, way back in history, when we started exchanging information, whether it's point of sale data or other kinds of data, you have to have protocols and standards for doing that. The internet is a great example, right? When it first kind of leapt into the public after the initial Mr. Cerf, did it, as part of DARPA and so on. Sure. It was the internet had all kinds of protocols. You guys that are old enough, if you went back 25 or 30 years, might remember the struggles and it all got standardized. So now the problem that we're having, of course, is every country seems to be taking control of their own internet, right? Restricting access, like in China, certain things can't be posted. That's certainly happening here in terms of what Facebook and Google are doing with Trump, as an example, right? They're limiting it. Now, he can always go find another venue and put it on the internet, at least for now. Couldn't do that in China because the Great Wall censors that. And there are lots of authoritarian regimes, Cuba, Iran, and even semi-authoritarian regimes like in India, where they do limit access to it, right? So I think that to answer your question very simply, do we need it? Probably not. Is it going to enable more? The whole goal was to make transactional environments a little bit more fluid, less friction. That was the claim. In other words, we're going to make it cheaper. Well, so far, blockchain transactions actually are pretty expensive compared to other transactions. That's one of the reasons people don't buy things with it, or I should say people don't accept it. Tesla originally was accepting it, then it didn't. But also the volatility, the cost of transactions is still relatively high. Actually finalizing a transaction in Bitcoins, because of the consensus, in other words, you have to have all of the different nodes, right? Say, yep, we got it. Yep, it's okay. And then, but that can take minutes, sometimes hours. I've even seen sometimes days to actually finalize. But in that meantime, the value could change, right? And so if you bought something in Bitcoin, I'm looking at if I bought a car from you and when Bitcoins were $50,000, I could have bought a low-end Tesla, I suspect. Unfortunately, Bitcoins are now roughly $30,000 or $31,000. If they hadn't, exchanged that immediately for dollars, they'd be out, 40% of the price. And that is one of the problems, aside from the cost of transactions. And as an example, Coinbase charges fairly high commissions, and they get it because they're one of the only games in town that actually do it. So do we need it? No. Is it potentially useful? Absolutely. So where I think it's going to go, by the way, and where it really does get useful are ways that you would lock up. So for instance, personal privacy, healthcare records. This hasn't happened yet. There's some experiments, but the idea that I own my own personal health record, my genomic profile, all of my health records, and I get to decide who can look at it, right? I can give them permission to look at it. That would be very useful for a blockchain, right? And blockchains would be extremely useful. Now, am I really going to keep a copy of my personal health record on my PC or, on my Mac or whatever, when it's in the future could be 10 or 20 terabytes of information? Imagine moving that one around. The answer is no. It'll be kept in some kind of a vault. I will have the key and I will give any doctor or insurance company, whatever, access to that. But that would be an example of where, a blockchain would be incredibly useful, right? But I will make a point. Look, we have trading stocks, for those of you who were around 30 years ago, used to cost 25 cents a share on NASDAQ. Today, it's maybe a penny or two, or free in a lot of cases.
Right.
So there is no friction in trading equities, bonds, currency trading. All of that is, I'd say, not entirely frictionless, but pretty damn frictionless. The idea of eliminating middlemen, I get it. It sounds great. The middlemen don't want to be eliminated. So that's going to be a problem. That said, right, we already have cryptocurrencies. I would argue what Alibaba with Ant does with Alipay, or, if you look at WeChat, those types of companies are already, pretty well down the cryptocurrency, but they don't call it a cryptocurrency. It doesn't necessarily run on a blockchain. Ali has a couple of blockchains that's trying out for doing trade finance and things like that. The blockchain is a small b, right? All of the cool stuff that Ali is doing for its trade finance is the fact that it really understands its customers on both sides, and it's better at managing credit. So people talk about, smart contracts. That's a great use of blockchain. It's like in concept, but if you think for a minute that the lawyers are going to allow that to eliminate the lawyers, right? That's what they thought in Hitchhiker's Guide to the Galaxy too. They sent them off to another planet, right? Joking aside, what ends up being disputed in most contracts isn't what the contract says, it's the interpretation of the language. So both sides agree to the contract. Yep, we agree, this is the contract, but the interpretation of that. Blockchains don't handle that at all. All they do is verify that you and I exchange information about a contract at a given point in time. We updated it here, and we've got a record of that. That can all be done in a distributed ledger.
So a distributed ledger is not the same as a blockchain, because the blockchain is the protocol that sits on top of DLT?
That's correct. That is correct. So blockchains typically, it is a distributed ledger, of course, but they have other things behind it. So again, distributed ledgers have existed for forever. I mean, you basically just replicate a database or a transaction or something like that. The middlemen take a small piece, but it's a very small piece. I would argue, in many ways, what's happening in stock trading, a lot of that is distributed ledgers anyway. I have my own ledger of my own stocks. I know what's going on. Is that kept at my brokerage? Of course. Is it decentralized? Not exactly, although I have a copy of it. And they send me records all the time.
Yeah. So I guess the idea is, if you have a distributed ledger, one needed some sort of a protocol for different ledgers that are siloed to be connected to one another in a highly secure way. Is that what the blockchain is doing?
Yes.
And so why couldn't are we saying we couldn't do that before?
No, we could do it before. I would argue that's what, examples of, networks like SWIFT or some of the other international, currency trading or any other kind of custody trading when you exchange information, those have existed. Was there a little more overhead than we would have liked? Yeah, but that, competition has pushed that down. The real issue, the nice thing about SWIFT, good news and bad news. The good news is they've defined a protocol that everyone accepts, much like, sending point of sale data. We finally have gotten standards around that. Those of you who recall, back 30 years ago, exchanging point of sale data was an incredible pain. We finally got standards for that, the internet and so on. All those are examples of standards. And so the real problem that we are having with blockchains, this is good news and bad news. The good news is there's a lot of them. There's literally thousands of blockchains now, and places you can exchange. And that's the big problem, is that you've got a lot of fraud out there, billions of dollars annually. If we look back, into 2019, it looks like there was, according to Chainalysis that does analysis, there was 9 billion in fraud. 9 billion. We could count, there are dozens of, I'll call them cryptocurrencies that were flashes in the pan that basically closed down. And so because a lot of this is secret, there was just I think it was over 3.6 billion in fraud on a Bitcoin. Now, it wasn't Bitcoin's fault, but it was a exchange that's set up in South Africa, and these guys were fraudulent. A bunch of people lost money. I think you guys mentioned that at the outset. Yeah, can you make money in it? Absolutely, when it's going the right way. But if you bought Bitcoins at $40,000 or $50,000, you're down 25, 30, 40% right now. So it's volatile. But going back to your question, do we need blockchains? Again, I can think of some great uses, but because there are so many of them, the protocols are incompatible. And this is one thing that Coinbase does. It recognizes, I think it's 40, at least last time I looked, 40 different cryptocurrencies, and it will exchange. So in other words, it'll take a position in it and allow people to exchange those, much like a bank does or a brokerage, right? So it'll match buyers and sellers, and it has a desk, and so it'll take a little bit of risk on it. That's why companies like Binance and Coinbase exist. They're adding legitimacy, right, to the whole idea. My guess is that it'll be public blockchains, right, that end up. So these are all private. So public blockchains that governments will eventually form for managing healthcare, managing voting. Estonia has done a lot of work in it. Again, but the big issue still is if you're going to do it, you really have to get, you need a government to make a decision or an international body to come up with format standards. So people talk about exchanging information across, you might have a pharmaceutical blockchain or an oil and gas blockchain. Yep. If a bunch of participants agree to a standard, it'll work, right? Walmart has one for doing, working with IBM Hyperledger, something called food chain, for managing the verification of that, yep, this was organically grown in certain fields and blah, 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 right? You can track your lettuce based on, wait, I could take a UPC code or some other kind of marking on the lettuce, and I could absolutely go back and do that. I don't need a blockchain to do it. By the way, here's the problem. Garbage in, garbage out. How do I verify that the farmer, all I know is that the farmer put the information in. How do I know that he or she is telling the truth? In other words, unless they took a picture of it, of their farm, and we all know those things can be fudged pretty easily. Maersk has something called TradeLens, for that is, again, based on IBM's Hyperledger. But again, it's blockchain inspired. It is a blockchain. It's not as decentralized as people would think. It's certainly not anonymous. Most of the commercial blockchains are not. Look, we've been trying to get standards for exchanging pharmaceutical information or parts information for 40 years, and we still don't have it, in terms of, and could blockchains help that? Absolutely. Yeah, which one? That's the problem. Gotcha. And there are, I call it the Consultants Full Employment Act, because if you look at all the consultancies a few years ago, were pushing blockchains like crazy. Why? Well, they have to go in and implement it. If you hire people to do that. And then it's ongoing, because if a company wants to do a blockchain, they, and in a particular way, then they have to integrate it into their ERP or finance or whatever. And that is a huge expense for commercial companies. So when a government does it, and we finally do have standards like we have for the internet or, other kinds of exchanges, absolutely, I think that would be great. And that's still a few years off before we see that happening.
Yeah.
So Dale, I just want to jump in real quick, is that obviously you're speaking to a lot of the risks and a lot of the hype around this whole technology space. And just as straight talking as we get here, one of the things that I've noticed is that there seems to be an age gap difference also. And what I mean by that is I see a lot of people that are in their 60s on up a lot more critical about these technologies than the 20s, 30s, 40s generation. And I wonder why that is. And I don't have the answer, but I do notice an observation that way.
Yeah, I have. Absolutely. I think it's, the under 30s are probably, certainly the biggest participants. Why? Much like the traders and, the meme stocks like GameStop and so on. We talked a little bit about that last time. I think that there's this is going to go back to what we talked about last time, but, and just a quick digression. I think, and this is going to get us into non-fungible tokens as well. Look, people want to belong to something, whether it's being part of a gaming group, whether it's being, and I think of a movie that came out last year called The Social Dilemma. It was on Netflix. That looks at how the social networks are manipulating us. Our sense of belonging, right? Going back to as human beings, our sense of belonging, people are willing to give up their privacy. They're willing, to belong to a group. That was kind of what that, and the social networkers like Facebook in particular, or, in the case of WeChat networks and so on, All of those are, incredible. You're part of a group, whether it's QAnon, we've seen that phenomenon, right? And so one of the things I'm convinced of is that, yeah, there's a group and or a tribe, whatever you want to call it. And we see more of those. I think you guys mentioned that at the outset. And so, yeah, there's this sense that I'm part of a group. I can share information. And the internet was the start of it. This is just a subset of that links people together. And of course, older people are less, let's just say, fluent in that kind of thing. They do less day trading. It's not that they don't do any, right? I mean, people our age, my age, and so on. Yeah, they play it. And I think more of them have seen this movie before, so they're a little more skeptical. And if you talk to the Gen Zs and millennials or any, those groups that are playing it, they would say, yeah, we recognize that we might lose money. It's, again, the day traders, the Robin Hood kind of things that went out with the meme stocks and bid up a restaurant in New Jersey to billions of dollars. And, it's a restaurant in New Jersey. Let's get serious here. I mean, it's a physical restaurant. And so I think the sense of belonging is what is driving a lot of these things. And I'm not judging whether that's bad or good. All I can tell you is it is manipulatable. That's the issue. So if we get to something like NFTs, which are now, taking off, I think you guys talked about at the outset, people have made tens of millions of dollars in this, selling an artifact of a painting, not the painting, the digital representation of it, or the picture of LeBron James dunk, or Lionel Messi's first goal. These are selling for millions, and it's like, that's crazy, right? All it is a virtual artifact, but people pay big money, for instance, to get weapons in World of War or some of the other crazy games, right? Those are digital artifacts, and they're paying money for it because they're involved in it. It's really, really addictive, right? Much like other social media. And what NFTs are is just yet another example, the non-fungible tokens, of this idea of belonging to a group that's playing in this game. So, for instance, before this, and I'll draw an analogy, people used to collect in the US, not used to, they still do. There's a real market for trading cards. Like a Tom Brady rookie card recently sold, or for $3 million. Wait, it's a piece of cardboard. But there will be NFTs of all that stuff,
nostalgia and what have you.
Right. So a picture of somebody doing an outrageous act, right? I made a joke of, maybe you could have a video of Elton John defecating on the Queen's lawn in Westminster. I'm making that up, but you could imagine somebody doing that, right? There was a guy, on a YouTube guy that had pictures of him defecating in various national parks and so on. But he became a YouTube star. Did he get money for it? Absolutely, right? People pay. If you're a YouTube star, you get sponsors, right? But all joking aside, NFTs are a bit like trading cards, right? I mean, it's just the digital representation of the trading card. You own the right to that.
And could you say fiat currency and the dollar is the same thing?
Yes,
Mr. Dale, 100%. Let's go there, Dale.
Yeah, 100%. I would argue in modern monetary theory, which we talked about last time, the difference between cryptocurrencies and what the U.S. government is issuing in scripts to the tune of trillions now, right? There's nothing backing that up. In fact, some countries, have already said they're going to, a few countries. I think it was Nicaragua announced that they were doing, going to do cryptocurrencies. Venezuela, these are down and out countries. I don't know who's going to buy their crypto any more than would take their debt before, but. All joking aside, I would argue Alipay and WeChat, as examples in China, those are cryptocurrencies for all intents and purposes. And, again, the governments, once we stopped pegging the value of our currency to how much gold we had in reserve, we were on a path to moving to crypto anyway. So I'd say we're way down the path, and I'd say the past year with the issuance, and if it not absolute acknowledgement than tacit recognition that currencies are in fact fungible.
Yeah.
The middle initial of NFT. So it's not a non-fungible token, but yes, they are tokens of sorts. There's nothing backing them up. So US dollar is a great example, the RMB. All of those things, if you looked at the total debt, in that countries, banks, consumers have, I don't know, last time I looked, it was like $220 trillion. And the GDP of the world last year, I don't know, 60, 70, something like that. So 3 times.
Yeah.
So we're already there. We're already there.
So I wanted to just step back for a second, and what's bugging me is a question around trading and the popularity of what we're discussing today. We're discussing it because it's popular and everyone's involved in it in some way, shape, or form, or studying it. So let's go into popularity for a second. I wanted to ask you this question. Hopefully we have the answer amongst ourselves, which is 2 things. And I'm going to go into class divide and wealth. Right, I'm trying to work out whether NFT, which is non-fungible tokens, and the buyers of that, the purchasers, are richer than the purchasers and the buyers of cryptocurrency. My guess is, and this is totally non-statistic based, right, is that cryptocurrency, because there's so many and they're pretty useless, a lot of them they're not backed up with anything, it's basically a fun gaming casino market for poor people or people who don't have a lot of money. And I'm making this statement because young people in today's generation don't have a lot of money because of where we are economically, right? That they can't buy houses. They're not in the same financial position that we were. Even at my age, I was in a position to buy properties. Someone who's my age right now cannot, or get into my stage. So total generalization, the ones who want to get rich quick are playing around with cryptocurrency. And I don't know the stats of how much of that trading is happening through hedge funds versus the individual retail investor.
Very little of it is in very little in hedge funds.
Yeah, right. And then the other side is NFTs, which is rich people who've got loads of money. They've got billions coming out of their, drawers, hanging around, bit of self-actualization, bit of psychosis, bit of whatever it may be. Yeah, I've got 3 million, big deal. And, next party I go to, I want to talk about the fact that I saw the guy defecating on the Queen's lawn and I own that image or that video. I don't know the answer, but I'm presuming, and correct me if I'm wrong, that has something to do with this, which is the demographic divide is not as simple as young people being more open to risk and old people not. It is also to do with this stuff.
Yes, there's certainly a bit of the crowd that hopes to get rich quick, as people have, look, Bitcoins went from a few $1,000s if you went back to 2017 or 18. So, it went up to 25, 30, at one point hit 60,000. What ends up happening, and people, it's been publicized, Business Week has come out with this and others, Bitcoin market is controlled by, maybe a dozen consortia that actually can control the market, that own most of the Bitcoins. And yeah, they kind of leak them out and so on. So I think you're right. There is a notion of get rich quick. And we saw that in some of the meme stocks that had nothing to do with Bitcoins or blockchain, as I mentioned, the restaurant in New Jersey, or, the GameStop, or some of the other crazy stuff that people are bidding up, with no, maybe it was just showing that we can do it. That said, yes, there absolutely are people who are looking at this and playing the game to make money. I want to go back, though, especially, for a lot of millennials, it's that sense of belonging, of being a part of a tribe, of being a part of a group. So the GameStop crew, we're going to show the Wall Street traders that we can, do this as well. Well, of course, then the titans step in. So you have people like Elon Musk, betting on it and riding it up. I don't know what he bought and sold at, but I'm sure he usually makes money in his transactions. There's a number, actually, I can't remember his name, but the guy who just died in a Spanish prison, who was the founder.
McAfee.
Oh yeah, John McAfee.
That's right. Mm-hmm. Yeah, I mean, he was a big, and also the founder of MicroStrategy, Michael Saylor. Has been, once you buy in, right, you want other people, and so Musk, McAfee, Saylor, you get big names pushing it. Well, they have a stake. right? And if the stake goes up, they make a lot of money. So there's that crew, absolutely. But then there's the naive people who want to belong, right? Especially around the NFTs. That you belong to a group of trading cards. Oh yeah, but again, think about that. Somebody paid $3 million for a piece of cardboard, and they can't do anything with it because if they scratch it or whatever, it loses value. So they keep it in cellophane. They might look at it. But again, now imagine a digital version of that where you could actually look at Tom Brady's greatest hits as part of your NFT. I guarantee in the next 12 months, somebody's going to come out with NFT trading cards, right, where you own the right to that. But it will also incorporate, depending on who has the rights to it, if they're smart. Actually, I'm going to joke, but this is kind of funny. But so a bunch of private equity guys took over Playboy. Right. Some of you guys millennials probably forgot about what that looks like. But, if we look, or Gen Zs, I should say, even more so. But, for us boomers, we grew up with it, right? So Playboy kind of went out of business, Chapter 11 or close, a few years ago, taken over by private equity for a song, very cheap. Guess what? They have hundreds of thousands of original photographs. So you want an original nude photograph of fill in the blank of movie stars like Marilyn Monroe or Jane. We got them. What do you want to bid on it? So they sold the first one a few months ago for $350,000. It's just a digital artifact. Now, that's the beginning. I suspect you're going to see a bunch of that stuff hitting the market in the next 12 months. And yeah, it rides on a blockchain. Big deal. But it's just a digital artifact, and you can trade it.
So I'm totally interested in the crypto conversation, and the technologies that are happening in the different ecosystems as well is really fascinating to me, especially around decentralization. When you talked about sovereignty of our data, whether it's medical, whether it's social media. I know there's some ecosystems that are being built on a social media decentralization platform and things of such nature, where Facebook and other companies won't control our data in the future, ideally, or it would be a different landscape.
Good luck on that one.
Yeah, I'm curious how that plays out. I have no idea. I like the theory of it.
Yeah. So I think in some places that will be true. It's going to be dynamic tension of who owns the data, right? So
yeah,
in the U.S., the government's seems to be stepping in and trying to take more control. And you see that in California with the California version of the general data privacy and who can do what and so on. And you see a lot of pressure, right? I call them the digerati on that. Even in China, there's pressure on them as well. I think there was always a backdoor in China for the government to look at the data anyways at Ali and Tencent, Tencent being the WeChat guys. It seems like it's getting more intense in China, and I think it's going to happen in the US and everywhere else. In other words, this idea of privacy, it sounds great. It's kind of a lost cause, in my opinion. That said, yes, you will have more control. I think that you will see companies coming out that are going to share. In fact, I can't remember the name, but there already is a social network company that says, look, we'll give you 80 cents of every advertising dollar that we used when we sell your data. Now, you want us to use it? Oh, wow. That's a pretty interesting, phenomenon. I can't remember the name of the network company that's social. They haven't taken off yet, but this is the idea.
Yeah.
See if they can make money at it. I mean, Facebook makes more money than God at this point, because it controls the data. But yes, there's going to be a dynamic tension between capitalists having the data and governments having the data. I think I know where this goes. In China, the governments are going to win. They will allow capitalists to have it, but they, of course, share it. And they will own a piece of that capitalist entity. That seems to be the direction they're heading in. They won't necessarily control it. They're happy for Ali and Tencent to go and make billions outside of China. But in China, we're going to control it. And so I think you're going to see that dynamic tension over the next few years working across this environment. I'm not saying blockchains aren't going to happen. I mean, there's an initiative in Texas, the Texas Blockchain Initiative. Not a surprise. Of course, it's Texas. That's not a negative or a positive. It's just Texas thinks that way. Oh, here's another, the next oil futures or whatever. And we're going to get into this. So they're actually looking at a Texas blockchain. Talk about this. I've talked to cannabis companies that are looking at the same thing. So I want to answer your question. I do think that the data is really an issue, and blockchains sound great, but as governments take control of them, guess who's going to control the data? I think the governments are waiting to learn more and watch and kind of, and then what they do, much like what I think is happening in China, they subvert the digerati. Oh, you want to do business here? Ali or Tencent or more recently Didi, you're going to share your information with us. All of it, right? Not that they didn't do it before. They're making it known publicly that the government is going to oversee this. By the way, there's some really good stuff involved. If you, in contact tracing, for things like for COVID-19, absolutely, that makes a lot of sense to put on a public blockchain. In other words, government run, where the standards and the formats, right? So until we had EDI standards, for instance, those of you who are old enough to remember 35, 40 years ago when it first came out, it was all over the map. It cost a fortune. Now, nobody even thinks about it. SWIFT and those, there are standards for that. Could this become a new standard? The question is, which one? Which blockchain?
Right.
But I suspect you're going to see the fiat currencies drive it. Absolutely.
So let's talk. I had two parts to this. One is just going to cryptocurrency just for a moment, and then we'll move into geopolitics for a second, because you have talked about China and you've talked about India and you talked about the US, of course.
By the way, quick point about China. China is now severely restricting the mining of Bitcoins.
Right.
They're shutting them down. India is doing similar things, right? So governments are already taking control of some of the cryptocurrencies. Now, I suspect in the US, it'll be a little bit slower because we tend to be more free enterprise and capitalist and blah, blah, blah. But, all of the authoritarian regimes, there is no way that they're going to allow anarchy, decentralization, all the cool stuff. The good news is they will standardize on a protocol that'll be similar to, I think of blockchain as nothing more than a 21st century version of electronic data interchange for doing banking. And we'll just call it, it could be artifacts. A lot of it is artifacts. Cryptocurrency is clearly a virtual artifact. But now we have it for NFTs as well, right? You can I'm going to use a verb here. You can NFT, an event, a person, a photograph, all kinds of stuff. Let your imagination run wild. That's where it's going. Playboy centerfolds.
Yeah, and it almost feels like operating in a virtual space where, going back to the example of the card, where at school you would trade and barter a card with another friend. Now I'm doing it online because I've created my online card and I'm creating supply and demand to say, well, I've got the original if you value the physical. That's if you value the physical. What we're seeing is that the next generation values the virtual as much as we used to value the physical.
100%. That's exactly right, App. 100%. It's like we don't necessarily have to have a physical thing. We don't need ownership per se. We're going to own the right to it. 100%. But I do want to mention back to belonging as also important, because COVID-19, it's been 18 months now, right? Has exacerbated dramatically that need for belonging, because our physical interactions, for the most part, have been, curtailed would be a understatement, right? And so belonging to I like the term tribe of some kind, whether it's QAnon, whether it's young Democrats or young Republicans, whatever it is, right? We want to belong. Humans have a need to belong. We're social animals, and people have figured out how to exploit that.
Yeah, you're bang on. And I think funny you mentioned belonging, because the last episode we had a gentleman called Russ Shaw, who is based in the UK, used to be the GM for Skype. He's doing some amazing work here in the UK around bridging, creating bridges between different countries on the tech side, building tech hubs, and is a wonderful man. And he's a master of community building, the network effects concept, physically physically. And we talked a lot about how now virtually you've got to almost reconsider and rethink how one will build trust and relationships in this new virtual environment, exacerbated by COVID, right? So,
and who controls it, right? That's
who
you know,
controls
and I think governments ultimately will. Although if you watch Ready Player One
Yeah.
as an example, which is cyberspace takes place, I think it's in 2035-ish, give or take, but that's 15 years from now. COVID-19 merely accelerated, dramatically accelerated our move into the metaverse. Most of us now work in the metaverse,
Correct.
right? For our work, for our,
True.
the amount of time people are spending online is unbelievable. So
True.
all of the big vendors want to capture eyeballs, right? And if I know what you're doing and I can watch it and so on, I know how I can manipulate you, right? All of that is going on right now.
Yeah, absolutely. So let me ask you this question, and you'll have a simple answer. And I want to ask this question so we take away, no matter what happens in life and what sort of, what sort of journeys or pathways one takes, you can do your own trading, you can make money, you can lose money. It's your journey. But I think sometimes when you spot something that is somewhat confusing, it goes against the grain of monetary theory, fiscal analysis, business models, conventional thinking, unconventional thinking. It's super confusing, but pretty much like a Las Vegas casino. You have to call it out. And by the way, we might have got it totally wrong, and we're going to have, we're going to be the embarrassed ones. But question for you, really, and I know Rick will buy into this. There are a bunch of cryptocurrencies that seem to be born on a daily basis by random people. Individuals are doing their own, another guy's doing his own. Someone just can't, like Dogecoin, a brilliant one. Even the guy who created
Companies
it.
do them. Like Kodak announced one, 18 months ago.
Gary V's got his own coin.
Gary Vaynerchuk, he's one of those guys. He's got his own.
Stock go up about 300% until they realized it was BS. So
yeah. So my point here, and please give us your viewpoints, is that for those who are not institutional investors, and the common man, the common person, who's like, let's have a stab at this. I'll put my $5,000, put a part of my pension, take some money out of my private pension, put it into this cryptocurrency. Because a lot of people are doing that because they all want to belong, yes, but they also want to make some money. Because
no, of course, of course.
So I find it really confusing that none of these cryptocurrencies can be traded. I can't use it to buy coffee, really. I can't even really use Bitcoin at this point to buy coffee, like in the local shop at Starbucks, maybe at one point. And even
about 4 or 5% of Bitcoins actually people use to, if that, it's probably less than that, but that's the current estimate. It's a very small percentage are used to buy things.
Right. So given that's the case, and given that just about anyone who gets the system can build a cryptocurrency or a token or whatever you want to call it.
Correct.
And one is trading, and the supply and demand could be 5 to 7. It could be anything. And you're literally just gambling, putting $1 here, $10 here. Isn't this destined for just destruction? Aren't the young generation, I don't care about the institutional investors for now, aren't people who don't have a lot of money going to really suffer? And who's going to help them? Forget about the trauma from COVID. We're just about getting over that trauma.
100%. Yeah, 100%. I'm a sophisticated investor, and I do not invest in this stuff. It's because, and I understand it. I have very good perspective on it. At some point, I might toil. I actually have, I bought and sold Bitcoins a little bit, but not for anything other than it just as an excuse. If you do it, you keep track of it, right? So I have done it, but I do not. But I do invest, much like in the cannabis market. I call it in picks and shovels. So this is my advice to people on the call. Rather than investing in cryptocurrencies or even in the cannabis market, which is the Wild West, in the U.S. now. What do you mean by picks and shovels? I'll go back. Trump's grandfather, I guess, made his money, I think, in the hotel and supply business for miners out in California. Mm-hmm. So companies like Coinbase and Binance as exchanges, right? Or in the cannabis market, there are exchanges like LeafLink and so on. They're in the cannabis market, but they're not cannabis retailers or growers. They're the suppliers, right? They're an exchange. So, companies, again, Binance and, Coinbase between them. If you want to exchange or you want to store your wallet or you want to store your Bitcoins, they're like custody, like Bank of New York, Mellon is a good example that does that in the real world, right? That's what these guys do in the virtual world, right? So those are the kind of companies that, I'm not saying they're not speculative, at Coinbase at a gazillion times earnings or whatever, but they do make money, right? But, and how long can they keep charging, like 5 times the value of a transaction for what they do? Again, back in the 90s, you could get 25 cents a share, for a NASDAQ stock. Can't do that anymore. The spreads were huge. They're not anymore. They're now measured in sixteenths, 16ths of a point. So all of that, as the markets become efficient, is going to go away. But to answer your question, yeah, a lot of people are going to lose a lot of money. And yeah, the sharks are going to make money. Absolutely. Just like they do, in gambling. And, think of horse racing, think of gambling and the manipulation that occurred before there was regulation. There is very little regulation today in cryptocurrencies, and certainly almost none in NFTs. That means that you're going to get bad actors, just like you had in the early days of horse racing or gambling or anything else, right? You're going to have bad actors. Can you make money at it? Absolutely. If you have a stomach for taking that, you want to screw around with it, absolutely. But again, that's not my cup of tea. I do think that there will be markets for NFTs and all this stuff because I don't see that going away. Therefore, the people behind the scenes that transact it, and if I were to use an analogy in the IT world, Oracle sells databases and software. They don't have to figure out how to sell you more, manufactured goods or whatever people use their databases for, or their ERP and so on. So the guys that are supplying, the software guys, obviously have had very good years. I look at Microsoft, biggest software, one of the second largest market cap company in the world. People are buying more of that stuff, and they will buy more of that, right? As long as we're going to work online, and they're going to capture eyeballs. And so Microsoft's job now is, we want to keep you on our platform versus Google or Facebook or whatever. That's the game.
Right.
Got it.
Yeah. So your advice is really ancillary services that support this infrastructure. That's where you want to invest.
Absolutely. If I have one piece of advice, I forget the specific companies, but that's my advice. Find the people that are supplying the infrastructure. Obviously, NVIDIA is a good example. They were supplying the chips for a lot of the miners, actually still are to some extent, although that market is kind of tailing off again because miners are being outlawed in places like China because of the energy. Likely in parts of the US, they're going to be scattered. But, if you can get cheap energy, then mining Bitcoins is, could be a big plus. So, you build your data center up in Iceland. Oh, by the way, that's already been thought of. People are doing that, or up in northern Canada, out in the middle of nowhere. Absolutely. And as long as you can get the, some kind of 5G out of there, we'll have those with low Earth orbit satellites by the end of this year, likely, or certainly early next year. That's going to change the game.
Got it. So let's talk briefly. I had a question around geopolitics, and we talked about how certain countries are limiting mining, and they're trying to control semi-autocracies, and we know who they are, or full autocracies, and they have a certain modus operandi, and they're doing whatever they need to do. If you look at the West, let's call that the East, just because I'm giving it a label. Then you look at the West, and America's as being the first one because it's the home of capitalism, the mecca of capitalism, and everything goes, and everyone wants to make money, and there's a certain mindset, and so on.
And lose money.
And yes, indeed, and both they go together. So if you think about what's happened post-COVID and sort of the jury's out. Some people say globalism is dead; it's not coming back again. Other people are focused on the idea that the opposite of that is going to be localization, regionalization, nationalization, whatever you may call it. Let's imagine there's going to be a shift. Shifts will happen throughout the cycle of existence. What is the shift you see geopolitically today, and what could happen with this alternative to the dollar? because digital currency is only popular and interesting public and or private, government or otherwise, because it's an alternative to the American standard, which is everything goes with dollar. Now with China being so much more powerful, soon being if not the first, definitely it's the second, being the first largest, the largest economy in the world very soon. How do you see this playing out around this concept of digital currency? Is it fair to call it digital currencies rather than call it crypto?
Yeah, no, that's fine. I think you can call it basically all currencies. Fiat currencies are all digital now anyway.
Yeah.
So as we joked about, the U.S., there's nothing backing up the 30-odd trillion in debt that we now have. It's almost 2 years of GDP here. So to answer your question, I'm a globalist, so I guess, and an optimist. So I do hope we have more, I'll call it co-opetition, as opposed to the rounds of sanctions and tariffs and all that. I think for a while it appears that we're going to head towards neo-nationalism. I rue that, but it certainly feels like we're on that path. I don't know that Biden seems to be changing that. Certainly his posture towards China doesn't look like it's going to be terribly cooperative. I think that's a mistake, as I've said before, not because I love China. I just, it's 20% of the world's population and it better be successful. Otherwise, we're not going to have a planet to fight over. In other words, you've got, 1.4 billion people there. The population stabilized, but also in India. Between those two countries, you got 40% of the world's population, not to mention Africa, Asia, and so on. So forget the West. We're talking 10% between Europe and the US, maybe 700 million people. We're talking 10% of the world's population. And so to me, this idea, and I do think we're going to see neo-nationalism, absolutely. I hope it's temporary. That is just, again, my own optimistic nature. I think it's going to get worse before it gets better. It really is up to Biden, and to me, it's up to the Biden administration, whether we do this or not. Accusing everybody else of their, slave labor or doing this and so on. It's like we're no angel. Supporting terrorism. The Iran nuclear deal. Why don't just bring them in and subvert it a little bit? I think that seems to work a little bit if we shared better. I don't know that that's going to happen anytime soon. So I think we're going to continue to see, at least for the next 3 or 4 years. Again, I'm sorry to say this, but I think we are going to see a rise of neo-nationalism, more protectionism, all of that. Less open borders, less sharing of information. But to go back to your point, I want to talk about currency. So for sure, people outside of the US and Europe are getting sick of the US dollar and the US getting to call the shots, right? As an example, US decided it was going to sanction Iran. The JPOA stuff, despite all that, and yet Canada arrested the CFO of Huawei about almost 2 years ago now, that she's been under house arrest because she violated, allegedly, U.S. sanctions on, she and Huawei violated U.S. sanctions on Iran. And there's an extradition, even though Canada did not go along with the U.S. Kind of interesting, right? So there's a good example. It's like, come on, guys, this is kind of silly, right? The U.S. can unilaterally decide that we're going to boycott, and everybody else has to boycott, because if you want to, transact with Iran,
if you want to belong,
right? Ultimately, that's right. Ultimately, you have to. That transaction occurs over SWIFT networks and dollars and so on. China will do everything in its power to get out from under that idea that the U.S. gets to control what China does. And by the way, I think they're right. The U.S. can't use the fact that the dollar is the fiat currency to, arbitrarily decide, or if not arbitrarily, let's say politically motivated decide that it's going to exclude certain countries. I think that the world is going to react negatively to that. And we're going to see that over the next few years. And that's going to cause a rise, or actually, I'd say foment a rise in alternative fiat currencies. Absolutely.
Right. Great. Brilliant. We have so much to talk about. We've run out of time again.
Of course.
We have one of our a past guest, actually, who is also very proficient, enthusiastic about this subject, Martin Exis. Martin, thank you for making this statement. I'll read out what I don't know if it's a question or it's a validation. So blockchain, this for you, Dale. Blockchain is only one innovation. Tokenization and smart contracts are more important because they allow decentralized autonomous organizations. Correct.
Yeah. So I'm not I think the idea of decentralized autonomous organizations it's an interesting concept philosophically. I think that most corporations, you really think that Walmart or Alibaba or Amazon want decentralized organizations? Last time I looked, most of those companies are incredibly hierarchical. All of the big titans in the market. Could we see that happen? Yeah, I'm not saying that's not possible. By the way, I think smart contracts, as I've talked about, if people can agree to it, but don't think for a minute that that's going to eliminate middlemen, especially lawyers. They always find a way to, let's just say, get underneath all this stuff, or accountants. So I do think that we will see, more movement in that direction. I'm not saying that's not going to happen. I think it's a pipe dream, the idea that we're going to have all this decentralization of governance and so on. I don't really see that happening. I think governments are going to take more control.
Okay, good. That sums it up beautifully. Rick, over to you to sum up the proceedings. We've run out of time. So, but what a fascinating session. Sum it up, buddy.
Okay, awesome. That's my summary. Absolutely awesome.
Yeah,
I love these conversations. I love your passion and enthusiasm, and your open mind, as well as your healthy skepticism. It really kind of brings the conversation to a more grounding place, because there's a lot of hype that's going on in the space, as we all know. And I've been infected by it to some degree, and it's had me be curious to look more into some of these technologies and these ecosystems that are forming, which I think are fantastic in theory, and we'll see in practicality what happens. But thank you again, Dale, for just your time, your enthusiasm, and being part of our Straight Talk Live tribe and belonging here. So thank you very much for that.
My pleasure. This is fun. I as I say, I really enjoy this, and I think this is a great topic, and I think that so much controversy, opportunity, but also an awful lot of pitfalls. So I just say to everyone, be careful. I'm not saying you shouldn't do it. Just be careful and go into it with your eyes open. There's a lot of fraud and Ponzi schemes and overhype here. Some of it's real, and blockchains will happen. I don't want to say that. Blockchains, absolutely. Public blockchains, government run, absolutely. And sure, we're going to have blockchains for a lot of things. I think the NFTs are a good example, but we had trading cards before we had blockchains. We don't need a blockchain to do that. Yeah, blockchains make it useful. Great.
Got it.
Well said. Well said.
Thank
you, Dale. Very much appreciate you. See you on the pickleball courts.
Yeah. Thanks, guys.
And then really quick, next week we're going to be talking to the author of Inside Money, Zachary Karabell, around sustainable capitalism. It's going to be a very interesting topic that's very relevant today. So thank you all, Straight Talk Livers. Go out there and invest smartly.
Be well.
Over and out.
Sustainable capitalism. That's a good one.
It is. All right. Be well, everyone. Thank you.